All right, so here we are with Andrea Burns with Innovative Mortgage. And what we're looking at doing is just explaining what's gone on with the new 30-year amortization that's available through the new CMHC program that's effective August 1st, 2024. So thanks for joining us, Andrea.
Yeah, hi Jason. Thank you for having me.
And so what can you tell me about this new program, this update from CMHC?
Yeah, so CMHC came out with this announcement. So as of August 1st, 2024, first-time home buyers will now have access to a 30-year amortization on high-ratio mortgages for new construction builds, including condos only.
Okay, perfect. Yeah, and so that's interesting that they have made it for only new construction. And so, how do you think this is going to, or what impact do you think this is going to have on the housing market? And do you think it's going to make it more affordable for the first-time home buyers?
Yeah, so one of the biggest hurdles for home ownership in young individuals nowadays is being able to qualify for that mortgage as well as affording those monthly payments. So, with being able to qualify for a 30-year amortization, not only will first time home buyers have a better chance of qualifying, but their monthly mortgage payments will be a lot less. So, if we were to look at, let's say, a $400,000 to $500,000 home, putting down 5% using a 5-year fixed rate, being able to extend your amortization to 30 years now and giving an extra 5 years on those payments, you could roughly save around $200 a month on your monthly mortgage payments. And for some, that's huge.
Yeah, it's a big difference on a four or $500,000 purchase. So, and that's excellent. And so, does this program cap somewhere? So, is there a maximum that you can use it for?
Yeah, so it's only up to $1 million homes. So, places like Toronto and Vancouver, it may not be as attainable because their housing prices are so high.
Yeah, and that does make a lot of sense. So, if you are looking for some of the homes that would qualify, there'll be a link in the description below. You can click on the link and see some of the homes that are currently on the market that do qualify for this program. Now, how do you think this is going to help the housing crisis?
Yeah, so since this new update is strictly for new builds only, I hope this will drastically increase the amount of new houses being built. And since first time home buyers have a better chance of qualifying with this 30-year amortization, they may be more inclined to buy new builds over existing houses. So hopefully this will lessen the gap on our supply crisis. And with that, the Canada's National Housing Agency says that progress is being made on building new homes, but in order to fix our affordability gap, we almost need to build 3.5 more new units over and above what we're already doing by the end of the decade. So we do have a huge gap to fill in the supply crisis. And I think this opportunity for first time homebuyers to get into new builds will be able to address this issue.
Yeah, I agree. I think it may shift some of the buyers that were thinking, no, you know what, I'll take a resale and maybe do a little work or have a little more space. All of a sudden incentivizes them to buy brand new builds to instigate more homes coming to market. Now, there will be some individuals that just prefer the features in the old communities or the older homes, but this will even work with infill, correct? So a new home in an old area.
So any new home, it'll definitely, especially condos too, which would be a huge market for first time home buyers.
Yeah, perfect. We are seeing more and more condos come into the interior spaces as well. So it doesn't limit the neighborhood. It's not necessarily going to force you to the outer ring of the city where all the new construction is occurring. There will be infill available, and we do know that you can find some affordable housing, 200 plus, and so it goes anywhere between 200 and $1 million for all these options that are out there.
Yeah.
Now, what are the limitations though of this new mandate?
So locations obviously are new builds only, and that includes condos, as we had mentioned, up to $1 million. So it's only for those high ratio mortgages. So as a high ratio mortgage, it's less than 20% down. With the new builds, you cannot do a draw mortgage with this. So it will only be new builds or completion mortgages only. And with having a high ratio mortgage, they have tacked on a 0.2% premium surcharge to your default insurance that you'll need to pay. So just keep that in mind. Depending on your loan amount, it may add $500 to $1,500 on your mortgage. And in the grand scheme of things, adding such a little amount to your mortgage, but being able to qualify and reduce those monthly payments may be worth it for lots of first-time home buyers. And of course, the last thing is it's only available for those first-time home buyers. So it's a borrower that has never purchased a home before, or in the last 4 years, the borrower has never occupied as a principal place of residence, either they or their spouse or common law has owned. So there's a lot of gray area to the definition of a first-time home buyer. And of course, each individual scenario is going to be different. So if anybody has any questions on whether or not they may qualify as a first-time home buyer, just reach out and we can take a look.
Yeah, that's perfect. Now, the other big question that we're getting is, where are we going to see interest rates? Because one of the challenges that we're having is the Bank of Canada is talking about rate decreases. We see people saying, should I hold off and wait for the rate to decrease before I do take this action? So what are your thoughts on where the rates are headed?
Yeah, so we've seen some Bank of Canada announcements that are decreasing the overnight or prime rate recently. And this has a direct effect on the variable rates, but not necessarily the fixed rates. Now, fixed interest rates are tied to the Canadian bond yields and not the prime rate. So if you'd like to bring up some of our bond yields here, so if you were to look at these bond yields, fixed rates in the market will be a max above this by 1.75%. So if you added 1.75% to this, this will be kind of where the max fixed interest rates will be. And on average, it's about 1.5%. So you can kind of use this as your baseline to look at fixed interest rates and know that as a max, it generally will be about 1.5 to 1.75% above.
Perfect. And so what I've just done is I've pulled up what the historical bond rates have been for the last 3 years. And you can see that there has been some fluctuation, right? So as late as April of this year, we're up close to 4. The bond rates have come down, but note it is also trending upwards. We're at 3.01%, 3.107% as of the 4th. And so there's no guarantee that these rates are going to continue to go down, even if the Bank of Canada is reducing the rates.
Yeah,
so if the Bank of Canada is reducing the rates, how can that affect somebody's mortgage?
Yeah, so with the Bank of, you mean with the fixed interest rates where they're at?
No, sorry, with the Bank of Canada. So when the Bank of Canada announces their rate decreases, are there some mortgages that will be affected by that?
Yeah, so anyone that has a variable rate mortgage will see a direct effect on that. So as those interest rates come down, people with a variable rate mortgage will see a direct impact on their mortgage payments, or depending on the type of variable mortgage, how their mortgage payments will go against their principal versus the interest. So looking at those variable rates, we do predict there'll be another about 0.5% decrease by the end of the year and a 1% decrease over 2025. So by the end of 2025, we should see about a 1.5% decrease on those rates. And although fixed rates aren't directly in step with these variable rates, they are still connected. And we do believe that they have some room to come down as well, just not likely as much as the variable rates.
Yeah, these 5-year bond rates will be tied to a lot of world events as well. So, for example, like what we see in Japan with the yen is having some influence, the global chaos. If Canada becomes a strong market to be able to invest in, it might mean that the bond rates don't go down in direct proportion to where the Bank of Canada rate goes down. So therefore, your variable rate will change and your bond rate, like we see here, could actually go up while the Bank of Canada rate is going down. So, but also this variable rate is what has some people ending up in trouble. They had great low variable rates and they were in for a certain term with the variable. Now, all of a sudden, the term is up and they have to either decide, did they get into a fixed rate or a variable, and their payments have changed. We also saw that with people that had locked in with 5-year fixed rates. As rates decreased, or as the rates went down, they locked in. Now the 5 years are coming up, and it's much more expensive to get a mortgage today than it was 5 years ago. And so there is a lot of influences happening in the market right now. If anybody does have any questions for you, what's the best way to find you?
Yeah, so you can definitely text, call, email, or book an in-person meeting with me and reach out. I'd love to answer anyone's questions, or, get started on a pre-approval process. So, with interest rates decreasing, we also have housing prices increasing over the next year as well. So looking at whether now is the best time to buy or when interest rates decrease a little bit more is a very subjective question to each individual situation. So either way, now is a great time to sit down and talk about where you want to be and how we can get you there. And you can always get a pre-approval to see what you qualify for. Keep in mind that we can lock in a rate now for up to 120 days. And ultimately, that will be your worst case scenario. So interest rates, say, increase, we can get you what we've locked you in at. If interest rates decrease, we can now shop around and switch you to a lower rate. So for those that are hesitant to let's lock in a rate, it's not necessarily being locked in. It's more of a baseline to where you will be and knowing where you can start looking.
Yeah, and that's perfect. And so that's something else to think about with this new first-time home buyer 30-year amortization program. Somebody can buy a new construction, which maybe is going to take, another 4 months because the house is already started. They can speak to you, get a rate guarantee, meaning that's the worst case scenario.
Mm-hmm.
And then if the rates do drop in the next 3 or 4 months before they move in, you're able to get them that new rate. But they are buying the house at the lower value. If you go to the market report video that should be tagged below as well, what you're going to see is we are seeing some strong upward pressure in pricing in Edmonton, and especially in the entry level market where most first time home buyers are going to want to be. We are seeing some increases in value of homes. So it may be an opportunity to be able to get the lowest price possible today and then hedge your bet and decide what the best rate is in 3 or 4 months when you move in. So all you'd have to do to start that is you can click on Start Application. This link to Andrea's website is going to be in the comments below. So go ahead, click on it. You can start an application, or you can book a meeting with her if you'd like. All you're going to do is click Book a Meeting. It'll come up to the booking page. We got a little bit of a lag. And then you can just decide what you're looking for. Do you want something in person? Do you want something via Zoom or virtually, or just over a phone call?
Yeah, absolutely.
So
Thank you. I appreciate that.
Oh, sorry, Andrea, go ahead.
No, I was just saying I appreciate that. Yeah, so feel free to reach out, and I'd be happy to help anybody that's looking to start the process or even answer any questions.
Perfect. Yeah, and even if you have a couple quick questions that you just want to know, where you're at with your current mortgage and what to expect when that comes up for renewal. Don't feel obligated to only be on this topic. Book a question or book an appointment with Andrea anytime, and she'd be happy to answer all your questions.
Yeah.
Well, thanks for coming in, Andrea. Appreciate that. And the market is changing. This is one of the programs that the government is putting out there to try and make housing more affordable and for there to be more houses on the market. Mm-hmm. I'm interested to see which direction it goes.
Perfect. Thank you, Jason.
Thanks, Andrea.